How's it going? I'm Barnett. I'm the financial planning specialist here at Wiser Wealth Management. Just going to take some time today to discuss the recent proposals of the Build Back Better Act. It was passed in the House, but it's still waiting to get approved in the Senate. We spoke about this as a firm back at the end of September about some of the proposed legislation and changes. Unfortunately, a lot of it's changed and a lot of it's still not approved yet, so we'll have to see how that goes through the end of the year. But currently, some of the changes are the income tax has stayed the same. So there were proposals for individuals above $400,000 in income of some tax increases from an income tax perspective, as well as the capital gains. There's pretty significant capital gains increase proposal that would make it similar to ordinary income taxes. However, there hasn't been any changes to that. They decided to not do that for this year. And you need to remember that also that due to the Tax Act proposed in 2017, all these tax regulations were set to sunset at the end of 2025 and 2026. So that will happen regardless, but we'll still have to see if any of these income tax or capital gains tax changes are enacted. But as of right now, there are no changes. Also, what was proposed before was that the estate tax would change. So currently the state taxation is at about $11.7 million per individual. There were talks of moving that down to $5 or even $3 million. But right now that is not in the bill, so there are no current changes to the state tax law at this time. Also, there were talks to get rid of Grantor Trusts and things like irrevocable life insurance trusts or ILITs and other Grantor Trusts. They've held off on that as well. They weren't doing the billionaire taxes or the wealth tax like it was also discussed, but there are talks for individuals, the ultra high income earners. You would be paying the 37% tax already, but there's also some surtaxes. So there'd be a 5% surtax on $10 million in earned income and above, and also a 3% surtax on top of that for $25 million and above. So this is a very small percentage of individuals, but there is going to be an increase for those ultra high net worth earners. Also, they've decided that they would extend the enhanced child tax credit through 2022. So that's still the $3,000 per child under 17, and if they're under 6, that's $3,600. That's fully refundable. So that'll be a big benefit to individuals with families. Although they did not increase the dependent care credit like they had discussed. So dependent care credit will not be going on any longer, but the child tax credit will be extended through 2022. Also, one of the bigger things is the SALT deductions. So state and local income tax deductions had previously been capped at $10,000. There are discussions on this new bill to increase that to $80,000 for next year. So that is something to look at, as well as that you would be able to get some higher deductions if you had higher house property taxes or income taxes, that you'd be able to deduct those. One of the other big things for business owners is that S-Corp earners of $400,000 or married couples of $500,000 on income, S-Corp profits are now subject to the 3.8% net investment income tax. So that'll be a big difference there for small business owners. And just for most individuals, there's also, unfortunately, they're talking about doing away with this bill with the backdoor Roths and eventually mega backdoor Roths. So if you're looking to do a backdoor Roth contribution, you should go ahead and do it this year, as well as go ahead and convert it in 2021 before this bill is enacted in 2022. Other than that, there's also some talks about the possibility of in the future having to take big RMDs from IRAs with over $10 million in the accounts, and also doing away with Roth conversions at certain income levels above $400,000, although that hasn't been passed yet either. The big thing to remember, like I said, is that this was passed through the House, still waiting on Senate approval. And then unfortunately, this could be passed around Christmas or around New Year's, so there might not be a ton of planning opportunities to take advantage of this year, but just knowing that this is what could be passed moving forward into 2022. If you have any questions, feel free to reach out to us by giving us a call or by going to the website at wiserinvestor.com and reading some of the blogs we've written on this, as well as our YouTube channel, Wiser Investor. Thank you.